All right, this is the first time ever that we're going to talk about this topic of King dividend stocks. And I'm just going to say this may be the most important show ever, and this might be the most important thing you're ever going to learn. To make it even more exciting, we're going to have Andy Tanner. We're going to actually make Andy Tanner mad. He's going to give us actually stock names. He's going to tell us 3 of these King dividend stocks. Some of them you've heard of, but we're also going to talk about 3 more that you've never heard of. Well, I've never heard of them, and I bet you almost never anyone's ever heard of these stocks. So I think that's pretty exciting. So we're going to tell you 6 stocks to look at. But of course, we're only telling you to look at it because we don't give financial advice, because we don't want the government crawling down our tail ends. Also, Andy and myself are huge believers in education over advice, but we're still going to give you the stocks to look at. Let's see. Please go to the comments, write in your thoughts, your comments. Last week, we asked you if you wanted to learn about the Federal Reserve, and I think we got more comments saying, yes, we want to learn about the Federal Reserve than probably any other comment we've got. So we are listening to our comments, and actually Andy's going to do a whole show next week or the week after on the Federal Reserve, and we're going to include a free course with that. But
can I gloat?
In a second.
Can I gloat a little bit?
All right, go ahead. Well, I do want to tell them that give them a free gift this week.
Yeah, you finish.
Yeah.
All right, you finish, and then I'll gloat a little bit. I'll gloat.
I'm gloating now because you're so generous. How's that? But Andy actually did a web training on how to use stocks to get out of the rat race. So we are going to put that link in the descriptions and evidently on the screen because our producer kicks butt. So Andy, if you would like to go ahead and gloat about the Federal Reserve, please do.
Well, I have people on my team who I actually created. It's hours long. It's like a 4-hour course. It's really valuable. And we go through all of the important levers the Fed can pull, kind of where they're at. It's a really fun course. And everyone says no one would ever want to see that because the Fed is boring, but it's actually really interesting. It's one of those things actually where as you grow and mature as an investor, it's like my kids. When they were first born, and growing up as toddlers, man, they turned their nose up at all kinds of foods. Like there were things, like my one son, he wouldn't eat bread. He had this thing with bread. He goes, and then one day we had some Italian food and he had a breadstick and, he's just found nirvana and then he liked bread. And, then they start, getting a little vegetable in their life, and stuff like that, little fruits. And I think the Fed is like that. I think people who become more sophisticated investors, all of a sudden when they realize how much power there is in that, and how much it steers things, and how much easier it is to make moves and see the future, they fall in love with that education. It's delicious to them. So,
well, and it's really
this much.
It's also where Robert Kiyosaki's head is at right now. He talks a lot about the Fed on his podcast and his shows. So that's a pretty big deal. And I'm going to pause one sec, sir. Sorry, my phone is going off, even though I turned the volume down. Sorry, guys. Let's see.
No problem.
So the Fed. All right. And Andy, I can tell you too that in the learning that Robert's taught us about the Fed, I actually did change my investing approach. So I will also admit, even though the Fed sounds boring, it really is important, and it did change how I do things. But we're going to talk about.
I was going to say, believe it or not, it actually has some underpinnings on what we're going to speak about today. Just ever so slightly. So it's always important.
King dividends, which I got to say, I like the title, but also it's really on brand. People will very often say stock investing is not on Rich Dad brand, but it is so on brand because you can do incredible cash flow, get passive income from stock investing if you know what you're doing. And I believe the King dividends are one way to do that. How do you feel, Andy?
King. I love King dividends. I didn't know much about. I didn't know much about the term, to be quite frank. I've just always enjoyed stocks with dividends, and we can talk about what they are and things like that. But King. It sounds like someone achieved, a great chess move or something. King me.
Well, also, I think you said that
checkers.
you will talk about the ambassador dividends, which is also pretty exciting to get into.
This
So
sounds like a multi-level presentation. You know, if you
it's a
do so
very,
well,
very
you can be a
big,
king or an ambassador, you know.
but
Very good.
I'm
Yeah.
excited that you're actually going to name stocks.
I don't know.
You
It's
don't
not
do that.
in this one, it's not that big of a deal, actually. So we'll be all
Yeah.
right.
So what is a king dividend stock?
So this isn't something that I've used in my vernacular because I just like dividend stocks. But the formal definition of a king dividend, I suppose, would be a stock that has increased its dividend every year for 50 years or more. And some of these companies have been around for, 75 years, 65 years, and they've done this. And some, I don't have the list memorized by any stretch of the imagination, but there's going to be companies you've heard of. It's just like when you run a search. When I run a search for criteria of stuff I'm looking for fundamentally, often there's stocks I recognize. Often there's thousands of them, and I certainly don't have them all memorized. So this would be the same thing. If you looked at this list, there'd be some very familiar faces and some new ones as well. Some you weren't familiar with. But I think what's cool about it is it shows a consistency. It's pretty hard in any business. Think about it, to draw a line A to B and go straight there for 50 years and not have major ups and downs. And the idea that you can increase the amount of money you're making every single year to the point that you can share that with the shareholders and actually take profits is astounding. I mean, businesses go up and down, up and down, up and down, but it shows a commitment to the shareholder and it shows some real power. These are usually not growth stocks. So if you're all about trying to buy low and sell high, like for example, Procter and Gamble is, I don't know if it's a king dividend or an ambassador. It might be an ambassador, but Procter and Gamble is at least 25 years in a row, at least 25 years in a row. That one's not going to double in price. That's not going to be your big buy low, sell high winner that everyone gets all, frothy about, but they do raise their dividend. And so it's kind of akin. I like real estate examples, Greg. Imagine having a home where you raise the rent every year for 50 years, like every year, up, down, sideways, good economy, bad economy. That's generally not what happened in real estate. You have times where you've actually had to drop rents a little bit to compete, right? And to get people in your properties. So that consistency of raising the dividend every single year for 50 years is impressive. It says
It's a
something
big
about the
deal.
company for sure.
Yeah, I was going to say one of your criteria, I believe, is the strength of the company. And a 50-year company, that shows a lot of strength. I mean, those companies at least started when I was born, basically, and
Yeah,
have
some
been
before.
successful enough to increase. Yeah, that's
Yeah.
amazing. And
So I can give
also,
you some.
go ahead.
Oh, go ahead. No,
Well, you
well,
mentioned that they're not hot stocks, right? They're not going to like suddenly make you rich. They're not buy low, sell high. But that's kind of one of the purposes of this show is to explain that stocks can follow the rich dad principles and create passive income. And it's not capital gains and buy low, sell high. There's a whole nother approach, which is really what you specialize in.
yeah, I mean, it's really funny because the mentality overall is always about price, 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 price. That's what people think about when you turn on CNBC, up, down, bo, 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 bear, bear, bear. It's an exciting thing, I suppose, to be in a gambling parlor. But I said to people this way: you don't need to have an exciting business to get. I mean, there's someone who made millions, if not billions of dollars selling paper clips and staples. They
Right.
bend little pieces of wire and they sell them all over the world. And, they're driving around in a Ferrari. And so if someone were to be at a gala and there's a red carpet and paparazzi's there and someone gets out of the back of a stretch limo and they say, "Who is that?" And they say, "Well, he's one of the major owners of the Coca-Cola company." Well, no one would poo-poo that. No one would say, "Oh, well, what a loser! How boring, Coca-Cola."
Right.
And yet, that's a king dividend stock. They've raised their dividend every year as long as I can remember, and I'm sure that's more than 50 years. And so that's a big deal.
Well, and that from previous shows, you mentioned that that's a big Warren Buffett stock as well. So Warren Buffett's,
He owns a ton of that. Yeah.
yeah,
He's the largest. Berkshire Hathaway is the largest owner of Coca-Cola for sure. And what is more important, and this is where we might even talk a little bit about our Fed, is I think more important than dividend yield is what I would call investor yield. For example, let's say Coca-Cola, and I should know this because I own it as well. But let's say it's like $60 a share, and whatever their dividend is, maybe it's like $1.25 a year or something like that. Who cares? Let's call it $1.60 a year. I think that'd be fair, somewhere in that neighborhood. We could look it up. So $1.60 a year would be 40 cents a quarter, something like that. That's probably in the ballpark of where it's at. And someone's going to say, well, I'm going to pay $60 for a golden goose that only spits out $1.60 every year. That's not a very good dividend yield. That's not a very good return on my money. Well, yeah, but Warren Buffett paid $3.25 for his shares. So, he basically is doubling his money every 2 years. That's insane return on investment. So his investor yield, he'll never sell that stock.
right.
I mean, if you bought your golden goose for $3 and it's giving you $1.50 every year, that's an insane return on investment. Well, what you're betting on is inflation. There's your Fed reference. Is if you're in real estate or stocks, your belief is that you'll buy the house at a price today, but 15 years from now the rents will be higher than they are today, but your square footage is the same. So whatever square footage you get into today is going to be there in 20 years, but the amount of money you'll make off that square footage in the future is much, much higher. So you buy it cheap today, and as inflation grows, you get more and more out of that square footage every single year. So the lesson is sooner the better. The sooner you buy that stock or the sooner you buy that real estate, the better off you are. Buffett bought Apple way late. He bought it, late. It's the most successful investment he's ever made, and he made it when he was in his 80s. Go figure. But people say, "Oh, it's too late." And that's just that stinking thinking. It's so many. It's amazing how many people poo stocks that never own them.
That's fair. That's fair.
Right? I mean, it's like I would more likely take parent advice from you because you have kids, right? Than someone who hasn't. So if you don't own stocks, learn about them because the inflation is incredible. Anyone who buys something at $3 and it pays them, 50% a year, that's a good investment because they're infinite in 2 years. Yeah, it's paid for itself in 2 years, and you'll have it forever. Unlike your occupation, you can pass it on.
Let me go back to one thing you said, because it's so on brand with Robert Kiyosaki and Rich Dad, because he's always preaching that cash is trash. And so what you're talking about is invest in the stock market. Don't hold on to cash, because with the Federal Reserve, with interest, it's losing its value every day. And so if you buy now, you come out ahead just from inflation alone.
Yeah, I mean, the long-term prospects for cash are abysmal. Long-term, if there was any bet I was going to make, it'd be that cash would lose its value. So I want to trade that cash for things that I think are going to be, really valuable long-term, like real estate, stocks, and things like gold, commodities. I think that where people miss the boat is they look more at dividend yield rather than investor yield, and they also don't realize there's things you can do to supplement. I love, a great stock. Like, I'll give you an example. I don't think it's a king stock, and it might not be on the S&P. I don't know. I should know this, but I don't know. I don't care much. Is like, I talk a lot about ExxonMobil, and ExxonMobil just rose their rose. They just increased their dividend. That's the word I'm looking for. They just took it up to like 95 cents. And it's amazing because, that's just not that long ago that it was like 81 cents. And that's that's over a 10% increase that I've enjoyed in that dividend. I only bought that. I increased my ExxonMobil position in COVID when it was cheap. And so you can find, dividend stocks. Now, some are just consistent. I talk a lot about Dow as a very consistent one, $2.80. Well, that thing's like, if you get that for $50 or sell puts to buy it at 40, that's a 5% dividend. You're starting 4 or 5% out of the gate. And then you can add to that with your option writing if you want to. But 10, 20 years from now, you'll be glad you bought some shares. It is probably, it's hard to say. I look at some of the syndications that I have, and I look at some of the single family homes I have. Those are managed with a property manager. So they're pretty passive, but I will have to deal. It's almost petty. Like the property manager will call and say, "Do you want to raise your rent?" And I'll say, "What are rents going for? And should I raise it?" And well, this person's a good tenant, so maybe I give them a break because I'd rather not have vacancy. Or maybe I say, "Wow, rents are high enough. If I had 2 months of vacancy, it'd be worth it to get a higher renter in there." Blah blah blah. That's pretty minimal maintenance,
Right.
We had to charge you because we had to have a repairman go over because a tree fell down on something or whatever. That's pretty minimal maintenance. It's not much headache, but stocks have like none. There's none, nothing. The money comes. It's just nothing to do. So yeah, it's a low way to participate.
Well,
participation.
We're about to go to break, and then I'd like to, let's say in the first minute of break, list a few of these king stocks to make sure people hear them before they have to go or bail the show. So let's make that promise. Right when we get back, we'll list some of these king dividends, and then I have one question about king dividends and the Fed that we'll hit when we get back. All right, we're back with Andy Tanner, who's going to now, as promised, give us some of these king dividends that you have heard of, and then we're going to give you a few that you probably haven't heard of. So, Andy, you want to start the list?
Yeah, there's a lot of them. I own some 3M is one. I own some Coca-Cola, as I mentioned. There's, Procter Gamble's been on the list a long time. I think we looked that up, and it was like 67 years in a row.
67,
They've paid more money. Walmart's on the list. There's I think I don't know if Lowe's would be on that list.
Lowe's is,
yeah. And there's also, I get them confused because there's also something called an ambassador, and that is an S&P 500 stock, like, Target, something like that, maybe. Okay. Where you
clarify real quick.
25 years.
Yeah, 25 years.
They're 25 years. Yeah, so it'd be like your Target and stuff like that. But it's pretty easy to Google, and there'd be some, like I said earlier, there'd be some you've heard of, some you haven't. But this is what I like about those. Let's say I read Rich Dad Poor Dad for the first time 2 weeks ago, and I look at my asset column and it's empty. All I have is a job. How do I change that? And I love this idea. My kids were in Argentina with Robert and Kim, and they've always remembered this. It was in the fall, and Christmas time was around the corner, and I remember that I think David was 9 years old, and this is quite a while ago, and Kim was on stage speaking about people that had nothing, had no assets, and she goes, "Go buy an ounce of silver, do something, just start buying something, start accumulating assets." I think people often there's certainly education that's important, and even required if you become sophisticated and want to do things faster. But at a very minimum, action is important as anything else. And not being afraid to make a mistake, getting over the hump of, oh my gosh, what if I buy something and the price of silver goes down, blah, 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 blah. And she said, just go buy some silver. And my kids both, took some of their lemonade money right when we got home, and they went out and bought some ounces of silver, and they have it still today, and they're still proud of it today. And the price has gone up since then. But also, when I asked my 9-year-old kid what he wanted from Santa, he goes, "I want some silver." That desire to buy things. And so think about it this way. If you've ever played the cash flow game, or even if you've ever played Monopoly, when you land on it, you buy it. You buy it and you buy and you buy it. And you're always waking up in the morning saying, what can I buy today to put in my asset column? And these types of stocks are great beginner level stocks that I don't have a problem with anyone going buying a few shares of Coca-Cola. I think it's a company, they sell billions of drinks a day, like a day. Like today, there'll be a billion. Like owning a company that sells a billion of anything every day is an exciting venture to me. You're partnering with Warren Buffett, the greatest investor of all time. What's not to like about that? And I don't try to convince people otherwise. They'll say, well, whatever. They can say what they want, but I love my Coca-Cola. 3M is down to where it's, at a price we haven't seen for a while. I mean, it's a bargain right now. So if people are worried about price, then King dividends are not for them. But if they care about cash flow, these can be a great place to start with a great track record. I might also mention this that I think is really interesting. If you invest in a syndication, and let me give a shout out to someone, brilliant investor like Kenny McElroy, who can, find a 200, 300 unit apartment building for single family housing, and you can invest your money with him. How would you get your money back? He'd actually borrow money to make a distribution to you, and that would be tax free if he did that. So interesting. A company is going to borrow money to give to me off the future rents that they're going to pay off that loan. So does that ever happen in stocks? Well, it's not tax free unless you do it in a Roth. It would be, but ExxonMobil did that same thing during COVID. Their income went way, way, way down. So how are they going to keep that streak of like 36 years or whatever they've got? They've got like a 36-year streak. They actually sold corporate bonds. They borrowed money and they paid their dividend, didn't even stop it, let alone decrease it. And now, the oil's back and, we're flying and driving again. They're making more money than they've ever made, ever. Those bonds were a great move. So, when a company's that committed to the shareholder, that makes me feel pretty good. I mean, think of all the oil they sell. Think of all the stuff 3M sells. Think of all the Pepsi, and think of Walmart. Is Walmart going away? If you, I had a quote that I think I invented, Greg, to help people get over the fear. I was doing a podcast on the Cash Flow Academy show with, Corey and Noah, and we were talking about, people that are fearful of buying stocks. And I was kind of on a rant. I'll try not to do a bad one here, but I'm like, get over yourself. Freaking get over yourself. I'm afraid to buy Coca-Cola. I'm afraid to buy Pepsi. I'm afraid to buy, I'm so afraid. Get over it. And then I said this, if you have enough faith to spend money with that company, and you have enough confidence to spend money with that company, maybe you could find the confidence to earn money from that company. In other words, when you go to Costco with money and you're going to spend it, you feel confident walking in there and confident in those products and confident to spend money at ExxonMobil at the gas pump. Why wouldn't you have the same confidence to simply say, oh, people spend money with confidence? Maybe there's also people earning money with the same confidence. So I don't know if that's a good quote or not, but it might go something like this. If you have enough confidence to spend your money with a company, then maybe you can find the confidence to earn money with the company. And cool. I think that's, and just start compounding and reinvest and let the compounding do its magic. Now, if that's not fast enough for you, that's fine. That means that you're older and that you haven't compounded well as a young person. I have a dear friend who I just love. And, I want to reach out and help him because he's kind of down on capitalism right now. He's been beat up. He's been beat up financially. And the problem is it's really that no one taught these guys in school what it really is. My sons are buying on a regular basis, and they're buying while they're young, and they're buying corporate America. So the problem is that Wall Street owns too many of these companies, and too few Warren Buffetts are in the world. And my sons see it as like Wall Street's a joke. I'm not going to let Wall Street own this stuff. I'm going to own it. And I'm going to buy it. It's for sale. I can participate in capitalism by owning a company by simply buying share. That word share is important. They'll share the wealth.
Right. Hey,
King dividends really share the wealth.
Let me go back while we're talking about your son again. You mentioned buying silver. Like, it's that easy. You can just buy one coin of silver and you're in the game. Is that the same with dividend stocks? Can you just buy just one, or do you have to buy 100?
You can buy you can buy a single share.
So that's the same concept as your silver concept. That
it's so cool.
Anyone can do it at any time.
Yeah, I mean, my sons, they take their money and they buy some stocks, and they love those dividends, and they love seeing the increase. And it's so fun to see them in their teenage years, enjoying some income. And teenagers don't make a lot of money. What, you go mow grass for $20?
Right.
Well, if you can make that same $20 from a dividend, that's pretty cool, right? Pretty neat. So so it's fun to watch them grow, and it's fun to see their confidence. And let's say you're older. Okay, start with a dividend stock and then learn to write a call on it. And that'll triple or double your income on that stock. And okay, if that's not enough, then start using options in a more advanced way. But you're juggling some tennis balls here. If you need more yield, you'll have to take more risk than just getting a dividend. That means a higher level of education to manage the associated risk. So the faster you want to make money, the more leverage you'll probably have to employ in real estate or stocks. Either, with real estate, you got to learn about debt. You're going to have to raise capital and learn about debt. And that takes talent, that takes skill, that takes knowledge to manage the increased risk. The same is true with stocks. If you're going to do that, you're probably going to employ some options and learn about premiums in addition to dividends. Great, do it. But your foundation, I think dividends would be a great foundation to start with, is to pick it. And you could really do a lot with darn near any of these stocks. You really could. They're all optionable.
And you mentioned just how easy it is. Like, it's so passive that you buy it and forget about it, basically. And, a lot of people I talk to here at Rich Dad, they're always looking for the shortcut. They're looking for what's easiest. And it doesn't sound like there's anything easier than this, at least to get started. Maybe not to become filthy, stinking rich, but to get started, feel the safety, lower risk.
There's an excitement people miss out on because they want to get rich quick of owning the asset. And it's funny because it's my wife's favorite meeting of the week. She really loves it. Is every Sunday, we don't always hit it right at 11 a.m., but that's when we schedule it. She loves it because you look at your asset column and you just see it kind of improve, right? And you see more stuff going in there, and it's fun to put stuff in that shopping basket. And, I don't know what to tell people. If you want to get rich quick, well, then you'll have to have some leverage, which means you'll be smart to get more educated. But your foundation is always ownership, right? It's always ownership, whether it's real estate, stocks, business. Your first step is to go out and buy something. So tell people, look, get over the fear. You don't have time for that silliness. Oh, I'm scared the price might go down. Coke sells 1 billion drinks every day. Its price will go up and down, but if you have enough power and enough customers already that are addicted to your caffeine to the order of 1 billion drinks a day, that's a fairly... I don't see that as being aggressive. If you have enough confidence to buy something and spend money on it, maybe you have the confidence to make money on it too.
Well, and that's something you brought up in your courses, which just remind everybody in the show notes, you can get one of Andy's courses, how to use the stock market to get out of the rat race. But one of the things you do talk about often is, have you heard of the name brand? Is that brand so strong that you can expect it to be around for 50 years? And that valuation is a big deal.
Buffett calls it a moat. There's never any guarantees. You and I would have to disclaim the heck out of that. Void where prohibited, no guarantees. You could lose all your money. Certainly, there's large companies that have gone bankrupt. Like WorldCom and Enron went bankrupt. Blockbuster Video went bankrupt. There's a lot of old, especially technology companies go bankrupt. But there's also like Kraft Heinz my kids are going to go to a baseball game, and my grandkids are going to go to a baseball game. My grandkids are going to go to a baseball game. They're all going to have an Oscar Mayer hot dog with Heinz ketchup on it. And I don't know if Weight Watchers will still be around, or maybe after they go to TGI Fridays, but all of those companies are owned by Kraft Heinz.
Right,
And
right.
I just, if I'm a betting man, I'd say that stuff's going to be around, that you're going to have a Coke and a hot dog, and the hot dog eating public, isn't always as health conscious as we might think. So there you go.
All right. So I did promise the audience that we'd give 3 stocks, King dividend stocks, that they probably hadn't heard of. I certainly hadn't, that our producer found. So let me list those off, but then I have a question about those stocks for you. All right. So here we go.
Okay.
We have Illinois Tool Work. Never heard of that before. Emerson Electric, Archer Daniel Midland. And those are just some of the King stocks that I think you said you could Google and find. Is being a King dividend stock enough to just go out and buy? Is being a King dividend stock, is that enough?
Not for me.
Okay, yeah. Do you need more study, education to help with evaluation?
If someone goes out and buys a utility, let me bring it up. I think the one that's been doing it longest is one called American States Water. So here's a utility that sells water. That's pretty longevity, 69 years. So they're at the top of the list. If someone just wanting to get started, went out and bought that just for the experience, maybe turn around and sell it later for something great. Doing something's better than nothing. For me, I have 4 pillars I work on. I want to do a fundamental analysis of the company. I want to look at their chart and see what I might do options wise. I care very much whether the stock is optionable and how much premium there is in some of these stocks, because I'm going to absolutely, I would not trade. I would not invest in stocks if I couldn't trade options on them. I wouldn't do it. There's too much easy money to be collected off things like covered calls that are way basic to learn.
Right.
We have a new product called the covered call cash machine, and it just shows people that single strategy focuses on it, because you can double the income over regular dividends on that. So because I'm interested in just more than the dividend, I want to add to that. If I find a King dividend stock that pays a great dividend, maybe their options aren't as attractive to me, and so I pass on that. I own many stocks that are not King dividend stocks. What I named 2 or 3 that I own.
Right.
Most of what I own is not. And some companies haven't been around for 50 years. I mean, if you say King dividend is a standard, well, then you can't own Apple, because it hasn't been around 50 years yet, has it? Well, it might be getting close. Well, it come out in the 80s, so it's getting closer. But yeah, and it hasn't paid a dividend for 50 years for sure. So you're going to miss out on a lot of good stuff if you narrow your idea. What I do think is a good idea, though, is if you haven't bought anything, go buy a share. Go buy 10 shares and see if you survive the experience. You'll say, oh my gosh, I just bought something. This is kind of fun. It's like Monopoly, buying companies.
So let me throw 2 things at you, and then we can stop. First of all, anyone, if you've given 30 minutes of your life to listen to this podcast, I really think you have something in your head that you want to comment on. Ask Andy a question. Tell Andy you love his shirt, but leave a comment.
My shirts.
What's that?
My wife, I hate clothes. I'm not a clothes guy. So I've got like 10 shirts that I have. That's all I've got. So I'm not a big clothes guy. So you can comment on you want my shirt, but I don't care. It's a doodad. I'm a big dude. I hate shopping. I hate all of it. So usually I look like I just mowed someone's grass most of the time, but that's how I roll.
Well, I do want to just end this with, I think this is one of my favorite shows, because King dividend stocks, it sounds fairly secure. I'm not going to promise anything. I'm not going to say there's no risk, but it really fits the rich dad principle of passive income and
cash flow.
And again, if you could start that, like you were saying, young, it just seems to me like a money tree. And if you're a little older, then you personally have strategies you can teach to make up for the lost time. So I just want to point that out. Leave a comment for Andy. Click on his course. It's free down below. Stocks to Escape the Rat Race. And Andy, last thing, I just want to thank you again for teaching me something new. I never even heard of King dividend stocks. So thank you.
Thanks for having me, Greg. This was a lot of fun to talk about it. Thank you.
Well, somebody's got to be smart on this show. So absolutely. So with that in mind, why don't you join us on the next show, and we'll talk to everybody later.
Take care, everyone.
This podcast is a presentation of Rich Dad Media Network.